Very good evening, friends. I'm Nalini Swami. Welcoming to my channel, Smart Index Edge. With the options, we are able to make out the huge fall today because the market stayed within the range from 4th till yesterday, expiry day. Only on the expiry day, I was able to capture the trend change before the end of the expiry because of the straddles option premiums. I was watching 24,600 call option as well as the 24,400 put option. Oh, sorry, 24,400 call option and 24,600 put option. It gapped down, but it was within the range. But only during the end of the session, this put option crossed over the call option, indicating that trend change is taking place. It indicated that, and that was the result of this huge fall to the 24,264. And it is the level from where the market had rallied over here. So now amazingly, it had recovered while closing, but still they have not crossed over, and the premiums have come close to each other. I'm going to show it to you on the premium chart. Let me go to the premium chart. This is my indicator, option premium, Nalini CE PE dual engine. In this engine, I have taken odd pairs. 24,000. See, if you go there, you can see over here 24,300 call option and 24,700 put option. I've selected these two odd pairs because yesterday the 24,600 to 700 put option crossed over. You can see they converged, and here, since it is the new series start, it is not yesterday itself while expiring last 11th weekly straddles. I saw the crossover, and it was confirmation that put dominated in the end. And finally, this is the beautiful move what we captured morning itself. I applied the 24,300 call option as well as the 24,700 put option. When I noticed that these are the base grid line for the call option and base grid line for the put option, and the market put option started from the base opening price, and it came down and it started moving higher. You can see over here so nicely it rallied and came up to these levels. These are the levels of 10th call option levels. And this is the level of 10th, correspondingly the put option level. The market, since already 1 week has been passed, the market came down below all these levels, came to this level, 28th and 29th expiry level. You can see over here, almost it came down to these levels. Okay. If you see there, the low made was 152 or 155. See, from there, market started recovering. So cleanly, you can see the market was trending up. You can see over here, I'm seeing this. The market gave an opportunity to enter into the put option, made an higher high, and this is the first reversal, first reversal trend is halted and it made a lower high. Higher high, lower high, lower high. This was the time that actually it was around 2:10 p.m. only market started reversing. It started falling and you can see the premium. The premium you can see is started coming down from, it is a boon for a writer also. The premium expanded so much, put option premium expanded so much, and they could have written this put option 383, they could have captured, it came down to 282. You can see over here in the table, on the table, you can see the final closing was 287, and this call option from 150, it rallied to 200, and you can see over here, let me put, take the price note, enable magnet so that it will 230. 230, beautiful. Actually, the market has defined the range today itself. So from now onwards, the market will be trading within the range of 24,600 to 600 or 650 to 24,200. This is the range for the market, and the market it did the same thing. See, whenever it went up, the call option rallied and gave discount, rallied, gave discount, and rallied, gave discount. They converged with each other, and the direction from the call option to put option changed. Now, the call option has come down, it will rally and then diverge. So, continuation, the trend reversal may not come this week. Probably the market may, we came to know that market is going to range within 24,200 to 24,600. So by applying this is the strategy I'm going to continue for the whole week. I'm not going to change the strategy. So whenever this put option comes down and it comes down and gives discount, the average price is 252. And then when it starts reversing, I'll take the put option here. And if it starts coming down, when it comes down, it may make lower low, like that, because the low was 139. Like that, the premium will decay, and this whole week will be contained between these two straddles. So that's why I selected. It is a very important observation. What I noticed is only when they straddles and the opposite support and resistance strike prices cross over, crisscross over, then the fall will be there. That is a boon for an option buyer also. Once you notice this, you can trade better actually. So now, from now onwards, this is the range. Within this range, you can trade for the put option as well as the call option. This is a beautiful example. We can select like that, and I'm also showing in the crude oil also. It was live. I took the trade. Crude oil, actually, it went, this is the call option, 394. You can see the call option is 7,007. I have selected an odd pair, 7,700 call option and 8,000 put option I have selected. So this 8,000 put option came down to when around 6 p.m. it came down to 228. It rallied up to 291. 291, 270 points means 7,000 rupees. Easily you could have made. And this call option 7,700 call option, it came down and it is now rallying. Actually, the crisscross between the towards the call option happened yesterday itself. Yesterday, when our market was falling, the this premium put option crossed towards the trend, changed to the call option. Probably even the call option is making a lower high, and it may again rally. Today it may be already, it is 8:28, and another 2 hours is there, it may go sideways. Tomorrow, so these straddles will work, opposite strike straddles. Why did I go for that is interesting observation on the NSE chain. Probably you might not have seen that. Let me take you to the NSE option chain. This is the interesting observation made me to select the opposite straddles. What I noticed is, I'll show you. 1 minute, I'll show you. Okay, let me print this screen so that I'll be easy. It will become easy for me. Easy for me. Okay. Where is from here? I'll print the screen. Okay. This much I'll take the screenshot. Okay, where is print screen? Yeah. I'm going to take the screenshot and I'll show it to you. That then it becomes very easy. Why it is not coming? Any problem? I'm not able to print the screen. Some problem with the print screen because I'm recording. It is not doing that. Anyway, let me take the, no, it is not doing. Anyway, let me show it to you. See, notice here, the at the money strike is, since the market closed around 24,435, it has plotted at the money strike as 24,500. See, two strikes below. The price premium of the premium is 147, and if you come over here, you can see this is the one matching with that. 24,800 put option is having the same premium. Okay. And then if you go there, and the same premium match will be, no, sorry, 24,000. Oh, I'm sorry, I'm showing some other thing. Bid and ask I'm showing. See, this is the 24,800 put option is 213 and 24,300 call option is matching with the put option. Okay, this is how the matching takes place. If you open your NSE option chain and get to know this, this is a very important observation. Then I selected these strike prices are the territory for our trade. So these are the premiums. See, if you come down 177 matches with the 24,550 put option, and 24,500 matches with the, this is 150 matches with the 24,400 call option. This is how you can take the trade. This observation made me to select the odd pair and the Nifty straddles, and I was able to make out their convergence and their divergence and the crisscross gave me the trend. This is the beautiful observation what I made. Fetches lot of money even in the live market. See, they came together, they diverged and got an opportunity and it started coming down. One more indicator is there. Let me take out this indicator. So you can see so clearly it is coming down and they are diverging again. And again the put option is coming to the bottom and the call option is rallying. This is how you can take very well. You can make money very easily by noticing the behavior of the premium, that too odd pairs. I'm not selecting the same strike pairs, matching pairs, I'm selecting the odd pairs. You can see I've selected 7,700 call option and 8,000 put option. They are the straddles, opposite premiums. Okay, friends, if you want to get access to my indicator, you can message me on this number 9845209666. Sorry. I'm doing all sorts of mistakes. You can message me on this number 9845209600. This is paid indicator. You get all the information. If you message me the pricing, how you can access and everything, I'll give the details. Only serious people do contact me, no fake people. Thank you very much, friends. Nalini Swami signing off.